What's up YouTube? My name is Zach Hartley and welcome to my channel. In this video, we're going to talk about the two different types of investment analysis, technical and fundamental analysis. We're going to talk about what they are, what the differences are, and when you would use each one. And all of the content you're about to see actually came from a course that I'm filming. So if you want to learn any more about the stock market or how the stocks work, definitely check out the links below. But without any further ado, let's get right into the video. And if you get any value out of this, please remember to like and subscribe. Thank you. What's up everybody, Zach here, and today we're talking about stock analysis. Now what I mean by that is how do you figure out which stocks to buy and sell? What method of analysis and methodology do you use to decide which stocks to get into or get out of? So let's get right into it. There's two types of analysis you can generally conduct. The first one is technical and the second one is fundamental. Technical analysis is using charts to make investment decisions. Now that's my personal definition of it, and that's what I think it is. Google seems to think it's a trading discipline employed to evaluate investments and identify trading opportunities by analyzing statistical trends gathered from trading activity such as price movement and volume. All of that information then gets displayed onto a chart, and that's how you make decisions. So I kind of summarized it, but basically what it is it's taking the price that the stock trades at throughout a certain time period and overlaying it with the volume of trades during that time period, and then extrapolating information from that to gather enough information to make a solid investment choice. Either buy it or don't buy it, or sell it. And it looks like in practice is taking a chart that looks like this. In the middle you can see the red and white and black dots. That is the price movement over basically a 6-month time period. The red and black bar chart underneath that is the volume, and then the rest of the information on there is a basically extrapolation of that price movement over time. What technical analysis is taking all of that information that's in this chart and then deciding when to buy and when to sell. Now there's lots of different patterns and formulas you can use to start to figure that out, and we're going to really deeply explore that in the next couple sections of this course. But the idea here is technical analysis is using a chart like this to make your investment decisions. It's usually done on a shorter time frame compared to fundamental investing. Fundamental analysis is using financial statements to make investment decisions. That's the Zach Hartley definition. Again, the Google definition is a method of determining a stock's real or fair market value. Fundamental analysis search for stock that are currently trading at prices that are higher or lower than their real value. Now what that means is all it is you're trying to go out and you're trying to establish your own value for that stock and then see if the market prices it at higher or lower. If it's higher, you might want to short sell it, and if it's lower, you might want to buy it so that you can make some money. So fundamental analysis is the idea of looking at the financial statements. The financial statements include the income statement, balance sheet, statement of cash flows, and the conference call. Now, when we're looking at public companies, one of the reporting requirements after their IPO is that they have to submit all of this information on a quarterly basis. And it's really convenient for us because now we can know exactly how much all these companies make. So if we just go to Google real quick and we type in Tesla investor relations, we can go in and we can see exactly how much money this company made in the last quarter, or in the last year, or the last 3 years. It's basically all available since their IPO. And it's one of the basically big reporting requirements and big kind of burdens that a company has once they go public. So quarterly financials, Q4 19 update. So this is their pretty version of it. Basically, here's the highlights and the financial summary. So highlights here, financial summary, boom, right here. So financial summary in millions of dollars, automotive revenues, Q4 2019, $6,368 million. Really cool. We now know exactly how much money this company makes. We also know that their net income or loss afterwards was $105 million. So Tesla made money in, looks like the last 2 quarters. They lost money 2 quarters before that, and they made money in Q4 of 2018. Now, what fundamental analysis is taking all of this information that we can gather from the financial statements and comparing it against other companies to see which one is the most valuable or which one is the most underpriced compared to their actual stock value. So that's the financial statements. The other factors that you also need to consider when you're buying anything and making an actual investment is the global and national economies. For instance, right now we're in the middle of COVID-19, and the global economy is drastically slowing down. Everything is slowing down as consumer spending is slowing down and people are staying at home. So you might not want to be in a tourism industry right now. You might not want to be in the airlines right now because nobody's going to be flying. So when you make your investment decisions, things like that don't come up in the technical or the fundamental analysis, but they come up in the real world, and that's where you need to be able to pull that experience and that knowledge into every decision that you make. After that, you've got the industry and the product. So if you're an oil and gas company and the price of a barrel is drastically falling, you probably don't want to be investing more money into that industry and into that product line. You also have business models. So Google advertising, all they do is consistently run ads online and it costs them absolutely nothing. Other companies that, like Tesla, they have to sell and produce cars and hopefully sell them at a margin. It's a little bit more of a difficult business model, but still lots of potential. But what you might want to think about is, what types of business models do you want to be in? Do you want to be in recurring revenue ones where cash flow is fairly stable, or do you want to be in consumer products where it's completely cyclical based on how good your product is that year? It really depends. Other factors you might want to look at are management. Does that team have any actual experience executing a business model like this? Trends and social impact, are they in line with the trends or are they fighting against them, and how good are they for the environment? Last ones are regulations. If you're in the cannabis industry, for instance, you are completely governed and regulated by the Canadian or US government, and you need to abide by all those laws, which is going to cost money, it's going to cost labor, and it's going to cost a lot of resources to basically just fit within those regulations. And the last one's competition. How saturated is this market? Is it easy to rip off? Do you have lots of competitors? And are there substitute products that people can buy if yours is too expensive or not working? Those are all things that you want to consider, because they are factors that will not be shown in the financial statements and they will not be shown on the charts. All right, value of both. Oh, we should put this into slideshow mode. The value of both. So this is where things really separate one from the other. When you look at technical analysis, you can look at those charts on any time frame. So this is what day traders use when they trade by the hour, for instance. This is what people use when they trade by the day or the week or the month, for instance. But over the longer term, the technical analysis doesn't help as much because it's more governed by earnings, and that's where the fundamental side of things come in. Now, the advantage here is that you can use the technical analysis to find the perfect entry point when you've identified a stock that is basically you want to get into, that is good value right now. So you can hold off on your decision until you find an entry point using technical analysis to get into one that you've identified using fundamental analysis. And that's how you improve your returns, by combining them two together. You also need to basically understand both of them. If a company's making money, you need to understand what the ratios are so that you can compare it and use it in comparison between other companies. There's also lots of other factors that you need to consider, and both of these, using both of them together as well as your real world experience with what's actually happening, is going to give you the best investment results. So stick with us. We're going to dive into technical analysis as well as fundamental analysis in the next couple videos, and we're going to go on a deep dive into what it really means to analyze a stock. So stay tuned.